Our next speaker is the CEO of PropertyQuants Private Limited. A Proptech startup bringing quantitative methods to global real estate. He has a PhD in decision sciences from INSEAD. He's a CFA chartered holder and completed his undergraduate work at Columbia University, double majoring in economics and mathematics statistics. And also holds adjunct faculty instructor roles at the Singapore Management University and National University of Singapore's Asian Institute of Digital Finance. Now, he has also published papers in management science, decision support systems, and decision analysis, one of which received a special recognition award. Dr. Nelson also started his career as a trader researcher at RG Niederhofer Capital Management, an award-winning US hedge fund deploying systematic data-driven medium and low-frequency strategies to global markets, and also spent significant time as lead trader at KCG, a leading global high-frequency algorithmic trading firm. Now, he was also a quantitative macro strategist at GIC and managing director at a proprietary trading firm. Nelson has been investing in international residential real estate in a personal capacity for 10 years and has a deep interest in bringing more systematic, quantitative, and data-driven approaches to real estate practice. Now, it brings me great pleasure to welcome Dr. Nelson on screen, who's all the way from Singapore. Hi, good afternoon, Doctor.
Hey, can you hear me okay?
Yes. Okay. Thank you so much for joining us this afternoon.
Yeah, thanks so much for the invitation. Happy to chat a little bit and tell you guys about what we're seeing in terms of how you can actually apply data science and machine learning to real estate. What are some of the companies in the space? What are some of the interesting business opportunities and trends? And then, a certain angle in terms of how this relates, especially to property developers. So yeah, thanks so much, Paljit, for the detailed introduction. That covers very much my background. I did start out, very much in this line of quantitative sort of academics. And then in my career was always building these data-driven models to automatically invest, be it futures or stocks or things like that. Along the way, I became pretty interested in real estate investing and invested for myself in a couple of different locations and said, hey, it kind of looks like the practice of figuring out where to invest in real estate is still a little bit different from maybe what's happening, in quantitative finance. Think about hedge fund space, right? We might be today in real estate where we were, say, 20, 25 years ago, where using all of these data science quantitative methods is still relatively new. If you fast forward until the present day, we think about 1/3 of all assets under management in hedge funds is run by quantitative funds. And depending on which market you're looking at, varies from anywhere from 60 to 80% of all trades are being done by computer algorithms. Now, in real estate, we see that actually assets under management is very large, right? If you look at real estate funds, right? And it's a very significant asset class for the whole world. But in terms of people deploying quantitative measures, this is something that's only beginning right now. So we spotted this opportunity to apply these methods into the industry, started this company, PropertyQuants, about 3 years ago with the goal of bringing these quantitative investment methods into real estate. So with that, that sort of background about myself. I'll talk a little bit at the end about, my contact details. And if you did want to interact with us and our company a little bit more, how you can get in touch with us. About first thing, sort of what is in fact the state of play for real estate and data science, right? There are two really good reports. If you guys have sort of the interest, go and look up the Kpmg Global Proptech surveys. So Kpmg Global Proptech surveys in 2018 and 2019, they're pointing out, by interviewing many participants across real estate industry, what's going on, right? So they asked all these participants, and almost half of participants said, of all of the technologies that exist in the world today, it's going to be the big data, AI, data analytics, data science, that's going to have the biggest impact on the real estate industry in the long term. But what's the state of play, right? If you believe that, then how much have you sort of taken steps to take advantage of that? Well, there's still a lot of room to go, right? These surveys also highlight that 80%, right? So 4 out of 5 companies do not have most or all of their decision making led by data. Still a lot of scope to improve and to use these methods. And yes, a good number of real estate companies have actually started some kind of digital transformation effort or, maybe a data science initiative. But of that, there's a little bit of a skills gap still in the industry. So we see that only 5% of people leading this kind of digital transformation effort have a background in data science or data analytics or anything in that line. So there's a little bit of a skills gap that needs to be filled. And we'll talk a little bit about some educational opportunities that might be relevant for that. Carrying on with the state of play, actually there is a lot of interest if we think about the Proptech industry, right? So any kind of technology applied to real estate, of which applying data science to real estate is definitely a significant component of that. Well, that's just grown really hugely in the last decade. Depending on which exact numbers you pull up, the story is approximately the same, right? The funding levels have just grown like more than 150-fold from 2011 till 2019 and continue to grow. So this is really a very hot space, and there's a lot of investment in this area. We also see investment funds getting into using these AI methods into invest in real estate. If we look in the upper left, Skyline AI is one of the more well-known companies or startups in the space, funded by JLL, TLV, and DWS, and they're using these artificial intelligence methods to assess and pick commercial real estate units to invest in. And as you can see from the news article in March 2020, they actually picked their second commercial real estate deal to invest in the US. A little bit more recently, we're also seeing this in other places in the world. So Investor, and I believe this is together with Oxford Properties, a large pension fund, was announcing that they're beginning to use AI methods to pick investments in the Australian property market. We also see Quarry, which ties together with Cherry, and Cherry is a big data provision company out in the US. They do a really good job of aggregating many different data sets that you might be interested in for US real estate. And in fact, it's a platform so you can buy many different data sets. They tie together with Quarry, and they're using these data-driven methods to automatically source the acquisitions that might be the most profitable out in Long Beach, New York. Another more recent development, Two Sigma, which is a really big quantitative hedge fund, previously trading, in more typical instruments, maybe like futures and things like that, recently announced that here they want to take their quant methods and move that into the real estate space. So this shift is underway. We see this trend coming, right? And we would urge people to sort of get into using these data-driven methods to pick real estate investments, and maybe even developments, to stay, ahead of or in line with the curve and not get left behind. Now, what I want to talk about next is, given that we know what the state of play is, and we know that there's a lot of opportunity to apply these sort of big data, AI, machine learning methods into real estate, well, what are some of the ways that this is happening, or what are some of the ways that you can do that? What are some of the companies in the space that are doing this? What are some of the monetization opportunities, right? So with that, one of the very first things is obviously providing the data, right? In a lot of different markets, data is kind of fragmented, or it might be opaque, sort of privately held. So there's an opportunity there for companies to come together, pull that data set together, and then on-sell that either to end users or to funds or to other players like that. Organizing that data set and making it available in a useful way is a very popular business model. If we want to look at Malaysia specifically, right, there are at least 4 players that we've heard of, and you guys may definitely know more, and we'd love to hear who's in that space. Bricks.my is definitely one of them, pretty open for consumers to subscribe. My Property Data, now partners with Property Guru, also able to provide to the users some degree of Malaysian transaction data, right? Urban Metry, we've heard about, they produce, and then there is supposedly a pretty good report, and there's a lot of analysis around Malaysian real estate. And then Data Prime is coming up recently, also able to potentially provide some information about the transactions. As we'll talk about on the next slides, also some of these players can provide some degree of property index information, as well as maybe some automated valuation. And I know we talked a little bit about automated valuation in the last presentation. So that's for Malaysia, right? I mean, if I've missed any of these data providers, in the Q&A session, I'd love it if people would share and say, hey, what are some of the other important data providers to look at for Malaysia? Now, if we look around globally, CoStar and Real Capital Analytics definitely sort of somewhat of an incumbent in the space, especially for commercial real estate, and gather the data also by doing a lot of legwork to go and figure out by calling people and all sorts of other things and getting submissions about where property transactions are happening, and produce this kind of information set so that you can make an assessment of potentially commercial real estate deals and trends. The Cherry, as mentioned, is coming up very well recently. I think they recently raised another significant amount of funding in the last couple of months, and are aggregating a lot of real estate data for the US. And through their platform, you can actually buy data sets from other data providers as well. In the UK, there is Realize, right, which aggregates this information together, across London and other parts of the UK, and you can buy them using sort of API calls from your computer and get that data set. In Australia, you might want to look at CoreLogic RP data, and there's obviously many more around the world, but these are just some highlighted companies that you might want to look at depending on where you are investing or developing. Price Hubble's an interesting startup, I believe started out of Europe, and more recently, I believe they've also added Japan to the data set. And it's not just data, but the map has an interesting sort of 45-degree angle view. So the first opportunity, and the first thing that maybe you want to look at, is a data provision and where might I get the data. You can obviously build the data set potentially yourself if you have access to it, or maybe you don't have access to it, or maybe you don't want to build that out or engineer that. You might want to look at some of these data providers. Now, the next step then in terms of, you have that data set. Okay, what do I do with it? Well, we want to understand maybe where the property market has come from. So what is the previous sort of movements in the market? The challenge for real estate, as opposed to, for example, maybe looking at stocks or commodities, is that every property is different, right? And each property trades at best once every couple of years. So we can't just take the average and say, okay, this is where the market has been. If you imagine, for example, in one particular quarter, somebody launches a very large new luxury condominium, well, then the per square foot rates are going to be very high. And that's going to make it look like the property price index is rising, when actually it's the quality of properties that's changing. So that's a problem, right? And there is a solution. What we can do is to use some of these statistical methods to control for the differences in property quality and produce an understanding of the market performance. And when you do that, we can also then zoom in to understand submarkets. So for example, this is analysis that PropertyQuants produces, and we're looking here at London residential properties. And what we're looking at here, the blue line is the index for all of London. But if you look at the red line, that's zooming into the submarket of only the prime central London properties. You can actually see that until 2019, that was starting to turn down more so than the rest of London. We do this analysis for Singapore as well, and we can see that although the overall index is turning up, actually those near sort of District 9, the Orchard Road area, those are actually turning down. So you can spot some of these divergences. You can even get more granular. So in this particular analysis that we put together, we're looking at the compound annual growth rate of capital prices from 2009 to 2014. And we can look at that condominium project by condominium project, and you can kind of understand which ones have done better, and maybe you can do a study about that and understand which areas are doing better or worse, and that can help you decide, okay, what might be the areas that you want to look into to develop or to invest. Now, the next thing is then automated valuation. So I know this was mentioned in the previous talk. We can think about, in the US, the Zillow's estimate. In Singapore, we have, maybe you go to UrbanZoom or XValue or things like that. As an example, and I'll put this on the screen, so hopefully you guys can see, I'm now typing in live. This is a automated valuation that our company puts together. We actually do provide this on a business-to-business basis. And what it is given a very large set of real estate transaction information, we're able to build a data science model on top that will give you, an estimated price today of a particular unit of a property. We'll talk about what might be a fair range of estimates for the property price. We'll talk about what that might be, on a per square foot basis. We can even think about simulating how that price would have evolved over the recent history. So that's an automated valuation model. There are many use cases for this. Obviously, if you're a realtor, if you are, an investor, even if you're a developer, you kind of want to know what's a fair price to bid for particular properties or buildings, to lease them out, and maybe to put them, on the market for sale. So those are some of the obvious applications. If we think and we look around, right, this is really popular around the world, so many different sites have this. There are some alternative business models as well. If we look across into the US, we have companies like Opendoor, which are called like instant buyers. And what they're really doing is, given this kind of statistical valuation model, will make an immediate bid for your property, and all you have to do is key in the address. They have a model behind that, and they say, okay, we will pay whatever the number is, maybe $300,000 to buy your house, right? So provide instant liquidity. There are some that are doing alternative financing. So you key in an address, they have a valuation, and they can immediately provide you financing. So maybe you can buy the next house before you sell your house, and they'll sort of finance that sort of, changeover, right? And then there's another application. When we build an automated valuation, we can understand which factors are going to be associated with a higher or lower property price. When we think about that, we'll then be able to say, well, which are the types of alterations to a property that might generate the most sort of return on investment. So, an app like Plunk will tell you, okay, what types of changes to your property are going to give you the most return, right? So those are some applications. Now, the next thing is a time series forecasting. That's a branch of data science that will enable us to try to look into the future. We can put together various property price indexes. We can tie this together with, say, maybe mortgage rates, other macroeconomic factors, things like that. And we can try to do some forecasting and say, hey, which markets are likely to grow the most in the coming periods, right? That has very, immediate sort of help. If you're developing a property and you said, okay, well, this is my estimated price today. Well, how much do I think by the time I've completed developing it that the new pricing will be in 2 or 3 years' time, right? Or however far you're looking out. Well, you can use some time series forecasting to try to get that answer. Also figure out, which are the neighborhoods or submarkets which you think might do the best, right? The types of methods you'll be looking at in this space are REMA methods, vector autoregression, vector error correction models, and some machine learning methods can help you with that. A couple of companies in the space that might be interesting. PMA does real estate forecasting. Real Estate Foresight does this in China. Oxford Economics, as well as Capital Economics, some of you may be using to get inputs about macroeconomic forecasts as you build some of your discounted cash flow models and so on. So that's another area. Now, if we think about data science for real estate, but with a particular view for real estate development, one of the types of analysis that could be really useful is kind of planning and development analysis. Now, there are a couple of companies really innovative in this space that you might want to look at. One of them is Envelope.city, and Envelope.city, I believe, started with looking at Manhattan in New York. And what they started with was understanding these, you can think of them as lots or land lots, as well as the zoning rules, the airspace rights, and things like that. And using a machine approach, able to understand all this urban planning or zoning data at scale, for the whole island of Manhattan, and pick out and say, okay, look, based on what's already there, which of these plots represents the best opportunity? Maybe it's underdeveloped, and maybe if I redevelop it, and given what I know about what can be built on that space, taking into account the architectural considerations, the zoning, the air rights, and what's around there, so other spatial information, maybe train stations and things like that, which might be the plots that could generate the best return on investment, right? So doing this using a data science approach to understand the data, understand what you can build, simulate all of this, and do this at scale, that's a really interesting application. Now, business model, you'll have to check their website to see what the latest is, but at some point they were looking at doing joint ventures with developers to go and exploit these opportunities, right? I believe that today they're expanding out into Asia, it might be Singapore, I'm not sure, but this is a company to watch, and this is definitely one application that would be really relevant for the development space. There are also a couple of other companies in this space that you might want to look out for. Ratio.city operating out in Canada, similar idea to Envelope.city. Map Your Property, also operating out in Canada. A little bit different. They'll help you to do the due diligence on an acquisition or maybe for development to understand, the factors precedent at a particular area in terms of maybe the planning permissions and so on. And Deep Blocks operating out in the US, also able to understand maybe the financials around a potential lot redevelopment and things like that. Location analysis and visualization of location factors is another interesting area to look at. PlaySense operates, I believe at least in the US, but it might also be in Europe. And what they do is, when you download certain apps onto your mobile phone, some of them are collecting your location information, and they actually are able to guess certain things about you in terms of your demographics, like your age, maybe your consumption patterns and things like that. By aggregating this information together, they're able to give you an understanding about various locations, maybe the types of consumers. And this can help you understand maybe density, maybe up and coming areas. Maybe if you're doing some kind of commercial real estate development, what are some good locations to look into? So that's an example for PlaySense. Aracle operates out of Hong Kong. They put a range of data together to help you to understand maybe locations, and then sort of density and what are the, restaurants in the area and things like that to help you decide, hey, maybe this is a site that I want to develop or things like that. Or maybe here's where I want to set up, this particular type of retail. So many different uses for location analysis. NoGeo started out in Toronto, in Canada. They can do sort of a 3D visualization so you can understand, what are the buildings around there and then sort of figure out the neighborhood and understand what you can build and cannot build. And Urban Intelligence operating out of the UK, gathering tons of public data from the UK to create a scoring of various sites. So you might decide, hey, this is maybe where I want, this is the site that I want to develop or invest in. You could search for the correct site to develop, and maybe you have a portfolio of properties and you can do some analysis with them. Now, underlying all of this, or if you wanted to take a step further and kind of do some of this yourself, is sort of geographic information systems. And one of the big companies in geographic information systems is certainly the Esri, which has the ArcGIS product, and that will enable you to analyze these sites and do this kind of spatial analysis at scale. So you could get into that. And if you did want to get into doing some of these spatial analysis yourselves, and then you might need to buy certain boundary maps. Companies like Edozo can help with that in places where, it might be costly to get it from the authorities. And then you may need to convert addresses into latitude, longitude code numbers, or the other way around. Companies like Smarty Streets are set up to help with that. A couple of other things you might look at: floor plan analysis, architecture, or BIM. Companies out of Switzerland, Archaeologic and Archalyze, help you to analyze some of these floor plans, understand what's possible, maybe even convert paper records into BIM, right? And then this company out of Singapore, Scoring residential floor plans, taking that floor plan and understanding how much livable space is there, what's the flow, and giving you a number so you understand what is the layout maybe that people demand, or how that layout can potentially impact demand for a particular property. Smart buildings, there's a whole range of topics there. I'm not going to get into this in detail, but I wanted to talk about just two sort of incubators for that recently set up. So CapitaLand in Singapore set up the Smart Urban Co-Innovation Lab, and Frasers, right, looking at sort of future of work. So these two sort of incubating startups in the space of smart buildings. And then there's a couple of emerging technologies that might be interesting. Image recognition. So Foxy AI will score the quality of a property based on pictures. That can be really useful. Augmented reality visualization from a plan. So Real AR based out of Australia. Give them a floor plan and they create, on your phone, you can move around and look at, with the view that's currently there in the site, what would a particular house look like, right? And you can walk around and pretend that it's there using your phone. Matterport to help you do 3D, VR viewings of properties. Really popular, given that people were not that easy to move around during COVID. You can still look at a particular property. And then drone inspection, right? So maybe in the development process, you wanted to see, hey, is this property sound? You could use H3 Zoom AI, which uses a lot of AI methods in the drones. So nobody has to climb the building, but they can check the condition of the building, right? Construction technology, if you guys are interested, there's a whole ecosystem there as well. And you can check out this construction technology market map that's put together by Thornbest, and you can find this online as well. So that's what I wanted, this is what I wanted to share. I wanted to also point out that if you guys wanted to learn a little bit more about how to apply data science methods into real estate, PropertyQuants, our company, does actually conduct an 11-week in-depth course that teaches people programming and then data science and the real estate specific, data science methods, as well as geographic information systems. And we have participants then go out and take a real world data set and produce a project that's directly relevant to their company, or for themselves. And so if you want to learn more about that, come to propertyquants.com/training and sign up on the form there. We're happy to tell you more. If you did want to get in touch to find out a little bit more about what we do, or if there's anything I can help you with, do connect at my email, nelson@propertyquants.com, or you can find me on LinkedIn as well. So with that, thanks so much. Told you if there's time for questions, I'm happy to answer one or two. If not, I'll leave it to you.
Right. Thank you so much, Dr. Nelson. So I think, ladies and gentlemen, if you have any questions, do post them now before we proceed with the next session.
Dr. Nelson.
Hey, how are you?
Yes,
How are you? Did you hear us just now at the panel discussion?
I'm sorry, unfortunately.
Oh, okay. I have a question for you. We have a problem, and I'd like to pick your brain on whether you have a solution for that.
Okay.
The country thinks that we do not have enough affordable houses for our lower income group. So okay, that's one way to look at it. If you look at it the other way around, is that we have a class of citizens looking to buy a house, and they have unmet needs. They can't find a house that they can afford. How could we quantify that? I know it's a big question, but could we quantify it? Could we actually? I mean, we don't have data on demand, you know? I mean, you can do a registration and who wants a cheap house, and you have growth of people signing up for it. That's really not very useful information. But, you know, how do we quantify unmet needs?
Okay, I think that is quite an in-depth question. I would say we could look at the census data to understand sort of what is the demographic breakdown. But I did want to point out one other thing. We actually see a similar trend or demand out in the UK, especially in London. And there's a company that, you know, we've been in touch with the founder. It's called District 34. And his idea is absolutely this, right? You know, there isn't enough affordable housing. Millennials are priced out of buying their own home, right? Prices keep rising. And so what he's trying to do with his company is use these data science methods to figure out what might be the 34th district in London, which, you know, it's actually really good commute time into the city, really good opportunity, but maybe underdeveloped. And so if we go and build some properties there, that could really help people in that particular you know, socioeconomic class. So that's one thing you can do, use these data science methods to figure out where might be the next area to build, which might satisfy some of the demand. So hopefully some of that is relevant to what you're
I think the where part is the second phase.
Okay.
How did London ascertain in the first place that they do not have enough affordable housing? How did they ascertain that? How did they come to that conclusion?
Yeah, I mean, I think this is a more involved discussion. You know, we can look certainly at some of the property price trends over time, and we can measure affordability, right? So we can look at what are people's median income, and we can look at what is the price, and think of that in terms of number of years of salary, and see where the trend is going over time. Whether you actually have a problem in terms of there are enough homes, or there are enough homes within a price bracket, that's a little bit more nuanced. And that's where then you get a little bit of people saying, oh, it's because foreigners are buying all the properties. Is that true? Is that not true? You know, the last I remember, UK was going to make this information about who was a foreign buyer available, but I don't see it yet, or maybe I missed it. Singapore, on the other hand, I think we've gone the other way, so that like we can't get the nationalities anymore. But I think we can still see whether it's foreigner or not. So it's a little bit more nuanced in that, but I think affordability is one metric, so we can look at where that's creeping up over time. And those statistics hopefully come from the government data.
What's the Singapore experience then? Do they now, what do they acknowledge at the moment? Do you have enough affordable housing for Singaporean, middle to low income group?
So I think that as contrasted to the rest of the world, so we look around, right, because we've had ultra low interest rates, and then further fueled by sort of COVID, people committing to having even lower interest rates. We have situations like, you know, property prices in Canada sort of running away, and when you poll people, they're like, oh, we wish there were higher interest rates so the home prices would come down a bit. Singapore's been a bit different, right? Like with the cooling measures being relatively effective, right? You know, at least in the city center, prices have been a little bit flatter. It's been picking up though, I have to say, more recently, so that you know, prices in the outskirts are outside the city center are rising a little bit more. Yeah, I don't know the answer. I don't know whether there's an official line about, hey, we have enough housing or not. It's unclear to me.
Right. Thank you very much. Thank you. Paul, back to you, Paul.
Thanks a lot, James. Thanks a lot, Dr. Nelson, for your input. I think there are no further questions. So I just, on behalf of REHDA Institute, I'd like to thank you again for joining us this afternoon. I appreciate it. Hopefully we can get you back again in future events. Right? Thank you so much. Have a good day.
Sure.